What would you consider debt? I mean, how would you describe debt as an accountant? I mean,
Well, I think it's simple to think about debt as what you owe because you spent more than you received. As a matter of fact, on the whole issue of debt and the deficit, there's a very interesting, funny story that's going around Main Street these days. A survey was taken, and the question was, what happens when the outflow exceeds the inflow? And on Main Street America, they found an accountant and they asked him this question. He said, well, that's simple. That's a deficit or a loss. Well, they went further and they found a banker. They asked the same question. The banker said, well, that's easy. That's an overdraft. Then they found an electrician. And the electrician said, that's a blackout. And finally, walking down Main Street, they found a congressman. And they posed the question, Mr. Congressman, what happens when the outflow exceeds the inflow? And not surprising, the congressman said, what's the problem? I think that's the problem on Capitol Hill these days. They don't think there's a problem when you spend more than you're taking in. And the debt really is the sum total of the accumulated deficits, which is the annual shortfall in what you spend versus what you take in.
well, what about the accrual basis accounting? How would you describe that?
Again, people are not used to thinking about spending in what they call accrual terms. But I think what's instructive is that an officer of a publicly traded corporation would be indicted for securities fraud if they sold stock to the public or issued a bond and didn't use a system called generally accepted accounting principles, which includes accrual basis accounting. Having said that, what is accrual basis accounting? It's the opposite of cash basis, and cash basis is what you use in your home in reconciling your own checkbook. You spend money, you write a check. It's only when you write the check that you put it in your book. It's only when you make a deposit that you put it in your book. That's the cash basis. That's what government is using, and I think wrongly so. The accrual basis says that you must get in front of the cash flow. You must record economic reality in this way. When I have the right to receive something, a receivable, it should be put on the books as income. When I have the obligation to spend something, that's really an expense, it should be put on the books as a liability. So the accrual basis versus the cash basis is much more meaningful in reflecting economic reality.
Okay, well, let's say the debt. I mean, what do you think the debt means to Joe Steelworker, especially when you talked about the off-book liabilities that we have?
Well, I wrote a book called Unaccountable Congress, and I had that question in mind when I wrote the first chapter, which I called the most expensive credit card in the world, and that's a congressman's voting card. In fact, let me just take it out right now and show it to you, because many people don't realize that Congress votes with a plastic card that looks very much like a credit card, your Visa or American Express or MasterCharge. Well, having been in Congress for 4 years and having been a certified public accountant, it was very easy for me to see this as a credit card, because what happens is, since 60% of the votes in Congress relate to money, the budget process, appropriations, every time this card goes in the computer for a vote, in effect, we're charging America. And since there's not enough money to cover all the votes that this card accumulates, that means we're adding to the national debt with this card. And what does that mean? We're putting this debt, these charges, on the next generation. Now, to get to the issue of debt so that the people understand it, what I did is I put the budget of the United States of America in Chapter 1 in the form of a U.S. personal credit card statement. In effect, I said, if the voting card is a credit card, then there must be a credit card statement. And people do understand credit card statements. They may not understand profit and loss statements or balance sheets, but credit card statements they understand. So what is the debt? The debt really is nothing more than what people understand to be the debt. It's when they go on vacation and they don't have the money, they charge it to somebody. That is their debt. Well, government is operating the same way. Government doesn't have the money each year to fund all of the expenditures it makes. So it needs to then go to the Treasury Department and instruct it to sell bonds. Those bonds become the primary debt of the United States of America, and I would say now they're up to about $5 trillion.
Well, let's say this. I mean, do you think the U.S. is headed the way of Mexico, and who would bail us out? Have you ever thought of that?
Well, let's bring it closer to home. Is it headed the way of New York City in 1975?
Or Orange County, maybe?
Good. Well, actually, I was a practicing certified public accountant with an international accounting firm, Arthur Anderson, who was hired by Senator Proxmire to be his advisor on the bailout prospects in New York City. And you don't have to look at Mexico, just look at New York City. What happened? Well, they couldn't sell any more bonds because people were asking questions. They didn't trust the financial statements of the city. And when Moody's and Standard & Poor's, and these are the ones who rate the bonds, and without a bond rating, you can't raise money if you're a municipality, when they started asking tough questions, New York City couldn't answer them. And then the banks started asking the same questions. So you got to a position where nobody would buy the bonds, and people were so burdened with the taxes in New York City, they started voting with their feet. Union Carbide moved to Danbury. When a municipality can't raise taxes or sell bonds, it's bankrupt. Could that happen to the United States of America? Well, right now, there is no Moody's or Standard & Poor's for the United States of America. You might say that maybe Japan, Germany, and England are because they buy our bonds. And if they started asking the questions the way Moody's and Standard & Poor's did back in 1975, I don't think they'd be happy with the answers. We just saw recently the audit of the House of Representatives. That's only $1 billion out of the $1.5 trillion entity called the United States of America. And look how shoddy the books are in the House of Representatives. I would think that those answers would not be satisfactory, and maybe then we could be looking at a situation where the United States of America couldn't sell all the bonds that it wants. And what do you do then? Who's going to bail us out?
Yeah, well, you mentioned the House. I mean, how would you compare the House to the way the accounting is done in the the way the accounting is done in the House, or was done in the House, to the way it's done in the federal government overall?
Well, just recently on July 18th, a major accounting firm, Pricewaterhouse, issued its audit report on a 15-month period that ended with December 31, 1994. This was something that the Speaker of the House and the Republican House leadership had asked for. It's something that when I was with Newt Gingrich in the House, we were members of the Conservative Opportunity Society. We had many conferences in Baltimore. We called them the Baltimore conferences. And we called for independent audits. Newt was very fascinated by the fact that I was the only certified public accountant ever elected, practicing CPA, ever elected to Congress. But at that point, there was such arrogance with Speaker Wright and Speaker O'Neill about accounting. You might say that it was literally cavalier the way they were treating the books of the House. I kind of sensed this because every quarter the clerk would report 90,000, in fact this is in the Pricewaterhouse report, 90,000 disbursements. They would put them on the congressional record as if this was accountability. And I remember members coming to me, Joe, you're the CPA of the House, you're the accountant, what do you think of this? I'm probably not going to be able to read this document, it's this thick. And I'd look at it and I'd say to myself, is it possible this is what the reporting and accountability of the House of Representatives boils down to? And that was back when I was a congressman, 1985 to 89. Well, now we have the proof. Pricewaterhouse has said that the exceptions to what we call normal structure, financial management structure, and organization are so deficient, so severe, that they can't even issue a report. In fact, they have given what you might call in the accounting parlance a disclaimer, which is the worst report an accounting firm can issue. What does that tell you? If they are saying that about the House of Representatives, these are the 435 people that I call the directors of government, the board of directors of government. I mean, who should be accountable if not the House of Representatives? Aren't they supposed to be the model for the rest of government? Well, they have failed that test miserably. And if Pricewaterhouse has said that about a $1 billion budget, that's the House of Representatives, what about the rest of government? The $1.5 trillion with a T budget. I think this is a smoking gun, and as chairman of Truth in Government, as a former congressman, as the only practicing certified public accountant ever elected, I feel vindicated because I've been saying this for years. I wrote a book in 1992 entitled unaccountable Congress. As a matter of fact, since I showed you the card, let me show you the cover of the book, because what I did is I memorialized that most expensive credit card in the world, a congressman's voting card, and I kind of painted it gold for effect so people would get the idea, the connection between a gold card and this, because it literally is being used as a gold card the way they charge money. But look what I said at the bottom. Credit line, unlimited. Expiration date, never. Bill to future generations. So this really is the image of government spending the next generation's money, the debt.
Well, do you think you could do that again, but without going through the thing about, like, I painted it this
Could
way?
you hold it up next time?
And just sort of go through the
Over a
more,
little bit more, sir.
yeah. And maybe,
Other way.
Okay.
Just
Yeah.
a little bit more higher?
Higher.
yeah,
Perfect.
and maybe you could go through that again, but without sort of explaining it, but just saying, well, this is a congressional credit card. Look
Okay.
at this credit line.
You know, we talk about the debt, and I showed you before the real deal, the voting card of the congressman, which I call the most expensive credit card in the world. But I literally put it on the cover of the book because I wanted to make the point that the debt probably is the biggest crisis we face in this country. And frankly, we're not seeing all the debt because we don't record all the debt on our books. But on the cover of this book, you'll see a rendition of the congressional voting card, the most expensive credit card in the world. And I say on that card, you can see it at the bottom, credit line, unlimited. Expiration date, never. Bill to future generations. I think this is what government accounting and government accountability has come down to.
Oh, okay. Well, what about, you know, the efforts in the 1980s?
And before I go any further, let me also raise this because I think this is another good visual we just spoke about, and you might take my words before, by the way, and then dub this in. But this is the report that was just issued by a prominent Big Six accounting firm, much like the one I came from. This is Price Waterhouse. I was with Arthur Anderson. And the report is not only instructive, to me as a citizen, it is disappointing. As a CPA, it's outrageous because what Price Waterhouse has said here is that they literally cannot audit the books of the House of Representatives. What that tells me, in simple parlance, so that people on Main Street can understand it, is that basically what we've had in the House when it came to spending was a slush fund. That literally they duplicated expenditures. It says right in the report that they overpaid and they don't know why, and they never got reimbursements. There wasn't enough of an audit trail so that they can render what you call a clean opinion. And therefore, I say to myself that there's no better way to describe the accounting process in the House under the Democrat administration, because they had it for 40 years. As a Republican, a minority Republican or a minority member, I tried to change it. It couldn't be changed. But what this says is that they ran the House like a slush fund. And that's got to change. And if they say that about the House, what about the rest of government? This is a smoking gun.
Oh, okay. Well, how about the average congressman? I mean, how much knowledge do you think he has had of the budget and the processes of accounting? I mean, how much knowledge do they need to, I mean, do you think a congressman needs to be a congressman, and how much do they really have?
Well, you don't have
But
to
you,
be...
I mean, from your experience.
You don't have to be a rocket scientist or a certified public accountant to smell a problem. And when, over the course of the years, the clerk of the House would issue a quarterly report, literally 1 or 2 inches thick, reporting almost like an automated checkbook, every disbursement, but not summarizing them. Isn't this enough to say to you in terms of common sense? This is not accountability. This is not a statement that I can understand. And since I am a congressman, and since I am one of the 435 directors of government, the board of directors of government, I believe, is the House, why shouldn't I demand something I can understand? So I would tell you that there isn't enough interest, or at least there hasn't been until now. Until now this audit report is being made public. I think there'll be a lot more interest. But I'd like to make one more point on that. And I think it's something that the public gets a kick out of. When I left Congress in 1989, I left behind 276 attorneys. Imagine a place with 276 lawyers and no accountant. That's Congress. And now Price Waterhouse has proven what the result of that mixture can lead to.
Okay, well, Neil, but I guess I was thinking not just the House, but I mean just in terms of what, you know, these guys were voting on overall. I mean, how much do you think they looked upon it as a financial decision rather than sort of a way? I mean, you know, how do you think they were voting? I mean, is it more a financial decision, or do you think they'd just be it as a way to, you obtain support from constituents? Or
it's a complicated question, and really, it gets down to what a congressman or a congresswoman is. You really cast two kinds of votes. You cast the votes that are important to your district as a representative of about 580,000 people, but then you cast votes that are important to America, because obviously the national security of America and the financial security, I believe, is as important as its national security. You can't have one without the other. These are also votes that congressmen and congresswomen cast. But I would tell you that the problem is that there's not enough information given to the members in a digestible form where they really can make a financial decision that's meaningful. So many of them then retreat to what's good for their district and perhaps what's good for their re-election. So what happens is we get into this wonderful rhetoric around the balanced budget amendment time, wonderful rhetoric about line item vetoes, but yet nobody wants to talk about, are we telling the people the truth? Are we using a bookkeeping system and computer systems that are capturing everything we spend? Are we using reporting systems that give us a meaningful summary so we can understand the entity called the United States of America or the House of Representatives? And the answers to those questions are no. Are we using a budgeting system that points out unauthorized expenditures before the money is spent and accounted for, so we can stop that before it's too late? The answer is no. I recently wrote an article to follow up on the book, Unaccountable Congress. The name of the article is Unaccountable Government, where I make that point, that we need to integrate the budgeting, accounting, and reporting functions of government. It's not enough just to say that we're going to now account for things properly. We have to apply those same good standards, they call them generally accepted accounting principles, to the budget process, the accounting process, and the reporting process. And guess what? That's about a 40-month period, almost 4 years. You can't limit it to just 12 months. We also need to strengthen the Chief Financial Officer system. That's the bill that I presented and was passed in 1990, signed by George Bush. We need independent audits, not just of the House of Representatives. We need independent audits all over government so we can trust the numbers that we're getting. And we need clear reporting. The people of the United States of America are entitled to a simple, concise report about what you're doing with their tax dollars. They're not getting it. And by the way, two other items. We need a capital budget. And guess what that is? Well, we spend $200 billion a year on assets, on equipment, on ships, on buildings, under our cash basis, a Mickey Mouse mom and pop store way of accounting for things. Nothing wrong with mom and pop stores. My father had one. It was good for him, but it's not good for a large entity like the United States of America. We should be recording the value of these assets, not writing them off as part of the deficit in the first year. And finally, we don't need a budget process every year. We need one every 2 years so we can do more oversight.
Mm-hmm. One thing, when you talked about the assets, maybe you could sort of edit the mom and pop statement out and just sort of explain what it is again. I mean, when you talk about ships, I mean, you're talking about a long-term investment, isn't it?
Yeah. Well, on the issue of the capital budget, basically what we're saying there is that if the government were using generally accepted accounting principles, they would not be able to write off as part of the deficit the entire cost of an asset, whether it be an aircraft carrier, whether it be the computer system that they're installing in the house today. They'd have to value that at the cost, and they would depreciate that over the period of the useful life of that asset. And we don't have that going on today. Now that might lead you to say, well, Joe, if we are writing off all of our assets, that means the deficit is higher than it should be. Why shouldn't we then reduce the deficit by having a capital budget? And I would tell you that you've only seen one side of the problem. The other side is we have many unrecorded liabilities. So when you change the system, you have to change the overall system, and unfortunately, our unrecorded liabilities far, far, far exceed our unrecorded assets.
Okay, and you mentioned financial security. I mean, that was sort of an interesting thing. I mean, when you made the statement that financial security is equivalent to national security. So, I mean, I guess this sort of means the silent takeover, the non-military takeover of the U.S. government, I guess, in a sense. You know, that we would have boards of international investors sort of running our economy if we don't get this under control.
Well, I hope we never have a investment banker running the economy of America. I think we need advice from investment bankers, advice from economists, but we need to employ independent accountants. We need more independent audits so we know what's going on. And the reason why it's important is that if you don't have economic security, if you're not able to have a system that can depend on a flow of money, then how do you have national security? And to bring it home a bit further, we spend a lot of money on defense. When I was a congressman, that number was over $300 billion. Now it's somewhere between 250 million and billion, excuse me, and 275 billion. That's a lot of money. Now, we need that money in order to have a minimal amount of national security for America and around the world. We are the only superpower left. If we decapitalize the United States of America by disguising our debt, and so that we boil down our system to a series of bailouts, as we saw with the problem with the S&Ls, then how are we going to provide the money for a strong defense? We are the only superpower left. So there is, I think, a direct connection between economic security and national security. And in between, you need financial management systems, you need a good accounting process, you need capital budgets, you need independent auditors, you need chief financial officers in every major agency and department of the United States of America. There's a whole bunch of things that you need before you can have numbers that you can trust and therefore say to yourself, yes, I'm economically secure. If you can't say to yourself that you're economically secure, then how are we going to make the case that we are nationally secure in our defense?
Well, you had mentioned the credit card statements. I'm sorry.
Can we stop for a minute?
Sure.
Shut the lights off just for a minute, because I think we need a little break to get the sweat.
Sure.
You know, those lights are really something.
Yeah, I can feel.
I didn't think out here we need them.
Oh, right. Okay. Sorry. Well, I think one of the things that you've mentioned is a number of liabilities or future liabilities are simply not recorded in the, it's masked by the budgeting principles. So, I mean, you would talk like things like Social Security, military and civil service pensions. There are substantial obligations of the federal government. They're simply not listed as obligations by the budgeting techniques.
Well, I wouldn't call them future liabilities. They're really current liabilities, but we don't record them, and therefore we think that they become a liability when we pay them, and that's the problem with the cash basis of accounting. Basically, this gets to the heart of the difference between the cash basis and the accrual basis, because there are many obligations to pay that the government cannot relieve itself of until it pays, unless it wants to default on its full faith and credit, and the United States government is not about to do that, because then it would never be able to sell another bond. And what we're talking about are large amounts. For instance, Social Security. The actuarially computed liability for Social Security for people who are working today, the amount that we would have to pay them when they're retired is somewhere between $4 and $6 trillion. Some people have said it's even more, but I'm going to use that number because if you're talking about anywhere between $4 and $6 trillion, you're talking about a lot of money. In fact, that's about the size of the bonded indebtedness. That's about the total of the treasury bonds that we've sold to the public and others, foreign countries. Some of it's even in the Social Security Trust Fund. That's $5 trillion. So we've got some big numbers. We've got $4 to $6 trillion in Social Security. We've got about $1 trillion in civil service pensions. We've got another $1 trillion in military pensions. We've got all kinds of government guarantees. For instance, there are entities called the Pension Benefit Guarantee Corporation. Well, that entity, which guarantees your pension, your private pension, because employers pay in an insurance premium, we now are told that there's not enough money in that and that there may be a bailout later on. Well, shouldn't we begin recording that liability on the books now so we don't have another $500 billion bailout like we saw with the Savings and Loan Associations? So yes, there are many things that are not recorded today that should be recorded, and no auditor worth his or her salt would give a clean opinion to the books of the United States of America without those obligations being reported, because we require the private sector to do that. You couldn't issue a stock or a bond if you were a publicly traded corporation if you didn't record all your liabilities. Yet the United States of America, and I dare say that the United States of America is probably the largest issuer of securities in the world, approximately $30 billion on average of Treasury bills every month, and yet we don't have the best accounting system to do that. In fact, we have the worst accounting system, the cash basis.
Well, let's say the Social Security Trust Fund. You know, a lot of people are depending on that in the future. I mean, how do you think they would, I mean, what's the odds that it'll be there, and how do you think the budgeting techniques might help give more clarity and true state of the Social Security system?
Well, there are political issues surrounding Social Security, and far be it from me now to get into those issues. But I think common sense would say that if every member of Congress runs on the basis that Social Security is sacrosanct, it cannot be touched, it is something that definitely will be paid, would you say that that's an obligation of the government? I would say so. And I would say that using, again, common sense, that since every member of Congress runs and calls it an obligation of government, it should be shown as an obligation of government, and not just a footnote, and not just some contingency, as some might suggest it is, because they say, well, you know, maybe we won't have the money to pay for it. I would say that we ought to accelerate this debate, and the way we do it is to use generally accepted accounting principles and the accrual basis to record it, because then people will be educated, will be informed about the real debt in government, which is not $5 trillion. It could be more like $15 trillion when you put all of these unrecorded liabilities on the books.
Mm-hmm. And I think you had talked about how these, I mean, these were actually like the Social Security Trust Fund. There was a point to take them off the books to sort of secure it. Is that right?
Well, the issue there is not to bury the Social Security liability. What you're talking about is the move to put the trust funds off budget so that monies that are raised through the Social Security tax cannot be used to fund the rest of government. And let's just talk about that for a minute, because in the past 10 years, I'd say from 1980 to 1990 certainly, it was President Carter that put the Social Security tax and the base on automatic pilot. Everybody has seen their Social Security tax deduction, the FICA deduction, go up. There's no question about it. Now, if that money had gone into the Social Security Trust Fund and it stayed there, people shouldn't be concerned. But I'm concerned, and I think you'd be concerned, and everybody should be concerned, when you're told that approximately $1 trillion that was raised under Social Security taxes was used as a substitute for the income tax. You know what that says? That says that we used...
Oh.
Guys, I gotta change tape. Why don't I just shut the
Sorry
laptop
about
for a
that.
second? I'm sorry about that, sir.
Social Security and the trust fund.
We're rolling.
Yeah, and the fact that it had been put off the books.
Well, the point you make is we generally talk about the Social Security Trust Fund being put off the books. It's not really off the books. We have to account for it, so it's got to be on the books. But I think what you're referring to is off the budget, because under the unified budget, what has happened is we've taken the surpluses in the Social Security Trust Funds and we've used them to fund the deficits in the rest of government. And that's not right. That certainly is not being accountable to the U.S. taxpayer, because we've raised the surpluses in the Social Security Trust Fund in the name of Social Security taxes. By the way, this brings up another point. In effect, we have a flat tax. There's an argument today about needing a flat tax today, and I think we need certainly simplicity. And hopefully we can come up with a form of a flat tax that will be not only simple, but equitable. You need both to have a tax that works. The point I want to make is that we already have a flat tax. It's the Social Security tax. It's the most regressive tax in the world. It has no deductions, no exclusions, no exemptions, and no credits. In fact, you could be homeless on welfare for 50 weeks a year and get a job for 2 weeks and you will have to pay a Social Security tax for those 2 weeks, and you cannot get a refund. So literally, we do have a flat tax. However, that flat tax is going into the Social Security Trust Fund only momentarily, because as it has been used to build up surpluses, almost immediately that money has been used over the past decade to fund the deficits in government. What does that mean? That means the deficits, even under Graham Rudman, Hollings, the 4-year plan that existed when I was in Congress, would have been much higher had they not been able to use the surpluses from Social Security to reduce that deficit. This is wrong. This is not accountable. And we need a system, and that system is generally accepted accounting principles, is using the accrual basis, not the cash basis, in order to account properly for these huge sums of money.
One thing, I mean, with the voters, I guess there's an assumption probably in Washington that the voters really don't understand, that they can't understand what's going on in the federal government, you know, in terms of the need, the programs and so forth. I mean, but I assume you've made the point that the congressmen really don't understand it either, in a sense. I mean, that how can they? Because you said that they don't have good knowledge. I mean, so do you think that the voter, I mean, you seem to think that once the voter is presented with the information properly, or the citizen is presented with the information properly, the system can understand it. I mean, they've made the system so that people can't understand it. So no wonder, so that of course has to lead government up to the experts, I guess.
Well, the problem is that we do have a system that the people can understand. Government is not using it. In fact, government has applied this system to the private sector through the Securities and Exchange Commission. If you don't use the appropriate accounting system and you are an officer in a publicly traded corporation, you can be indicted and incarcerated for securities fraud. If you don't use the right accounting system in preparing your tax return, and you are a businessman preparing a tax return, you can be indicted and incarcerated for tax evasion. Now, why aren't those same principles being applied to the books of the United States of America when we're talking about a huge amount of throughput, a huge amount of money, approximately $1.5 trillion? This is the question that has to be asked, and as I said before, the audit by Price Waterhouse of the House of Representatives is a real smoking gun as to the disrepair of the accounting process, the financial management process, and the accountability process in the rest of government. Now, it's unfortunate that people are not trained, or not all the people are trained in accounting. So it's difficult for people to even understand sometimes the profit and loss statement and the balance sheet that they get from the companies in which they own shares. That's one of the reasons that I thought of a creative model, and that was putting the budget of the United States of America in the form of a credit card statement, which says, Mr. and Mrs. Taxpayer, this is your share of the national debt at the beginning of the year. And it was approximately about $35,000 per taxpayer. And I said, now, here's the purchases section. Here's what government bought for you with their voting card, the most expensive credit card in the world. Your share of Social Security, your share of defense, your share of social welfare, your share of what we spent on agricultural programs, the criminal justice system. And then there's another section. It's called income. Well, here is what you paid in income taxes last year. And I said, by the way, thank you for your proud payment on April 15th, just to be a little bit cute so they got the message. But it also shows their Social Security taxes and other taxes. And by the way, if you look at the increase in the Social Security taxes over the last 10 years versus the income tax, you can see how we've substituted the income tax by the Social Security tax, and I think that's wrong. And finally, I have a section, finance charge. And what's that? That is your share as a taxpayer of the interest on the national debt. That's the bonded debt, the $5 trillion in bonds. You know what that number was last year? Over $200 million, almost $2,000 per taxpayer. And then at the bottom, you have your new balance at the end of the year. Now that's a simple statement. And you know why it's a good way to present it? Everybody has a credit card. Everybody gets a credit card statement at the end of the month. Why shouldn't we do something as creative as putting the accounts of the United States of America, at least the annual spending, on that kind of a statement? And you might say, well, how do we get that to the public? Well, there's a document that everybody gets just after New Year's. You know what it is? Your federal income tax returns and the instructions. You can easily put this on the inside cover to say, now, Mr. and Mrs. Taxpayer, here's what we did with the $1.2 trillion you gave us last year. We spent $1.5 trillion. We had a shortfall of $300 billion, so we had to borrow to cover it, but we wanted you to know what your share of it was and how we spent it. I did it. It's in my book, Unaccountable Congress. Why isn't someone in the House of Representatives and in the Senate picking up this simple way to inform the American people? Thomas Jefferson said, information is the currency of democracy. And I would say that financial information is as important as anything else.
Oh, okay. And you mentioned the tricks that Congress has used to obscure the true state of the country's finances. I mean, maybe you could go into some of those and how they've worked. I mean, the committee systems and how they've used the.
Well, I've listed a litany of these things, but I wasn't the first. David Stockman, as head of OMB, the Office of Management and Budget, listed many gimmicks. He called them smokes and mirrors that they used to artificially balance the budget so that they can say that they were in technical or legal compliance with the law, that the budget was balanced. And what are some of these? Well, I mean, there's something called an asterisk that they put on an amount of money when they need to find money, and it says savings to be realized later. Now, what does that mean? Well, that means I can't find something to balance it, and I'm going to look for something later on, but I'm going to put it down now like I almost have it as income. I mean, that is as shoddy as you can get. What's another one? How about putting things off the books? In Congress, it's called off the budget. But what that really means is it's being put off the books. Let me give you an example. When I was in Congress in 1988-89, we were beginning to see the problem emerging with the savings and loan bailout. And the first appropriation was $50 billion. We now know that the total cost is going to be $500 billion, but $50 billion. Well, they created an off-budget agency called the Resolution Trust Corporation, RTC. They issued bonds, raised $50 billion, and then transferred that money to an on-budget but insolvent agency called the FSLA, Federal and Savings Loan Corporation. Now, what happened there is very interesting because on the cash basis, if I raised the money off the books, literally, I didn't have to record that obligation. So now we have $50 billion that didn't have to be put into the deficit that year. But since we sold bonds, it ends up being part of the national debt. But it wasn't in the deficit. But when I transferred the money to an on-budget agency, guess what happens on the cash basis? That immediately becomes $50 billion of income the day I transfer it. So here I've got the income, but the obligation is kind of off the books, at least for the counting for the deficit. A reporter that year, I think it was Karen Digmiller, in Inside Magazine, said, this is ludicrous. This is like a husband going out, borrowing $100 and coming back and giving that money to his wife to spend. And she spends only $50, let's say, on household goods, and they think they've saved the other $50. They forgot that they borrowed $100 to begin with. This is what's going on in the United States of America. Since we're not recording the liability when we raise the money, we think that we only have to worry about the amount of the spending. No, I think that we've got to do what's accountable, what we've imposed on everybody else in the private sector, and that's to record our obligations as well as our income and expenses.
And any other tricks that were notable or that you thought, deserved condemnation or?
Well, I think one of the biggest tricks of all is the use of the cash basis, because the cash basis of accounting, I've referred to many times as a Mickey Mouse way to measure economic reality. You might be able to use it for your household checking account, but on a huge entity like the United States of America. In fact, Price Waterhouse, in its statement, and the House has a $1 billion budget, and that's less than 1% of the federal government. They said that on a huge entity such as the House of Representatives, that you must use a system called the accrual basis or generally accepted accounting principles. So I think that the biggest gimmick of all is not using, for the United States of America's books, all of the agencies and departments, not using the right kind of accounting system. What this enables you to do is to not record your liabilities, your obligations to pay. And if you're not going to record your obligations to pay, if you're not going to reserve on losses, and you might say, well, what does that mean? Well, for instance, the government is not only a borrower, it's a lender. Student loans, small business loans, many of those loans are not kept track of very well, and therefore we don't collect them all. Well, shouldn't we be recording right now the amount of losses? Any business would have to record an allowance for bad debts, contingencies, those kinds of things, a reasonable reserve, yet the government doesn't. So using the cash basis, to me, is another gimmick because it allows our elected officials not to record all their spending. And by the way, by not recording all your spending, it kind of makes it easier to get elected. Because if I can tell you, as a taxpayer, that I'm not spending as much as I really am spending, then you're kind of disarmed. You don't really know what's coming, and you think that everything is okay. Although the public knows that $5 trillion on the books is not that good, they would be shocked to find out that under generally accepted accounting principles, the number is well over $10 trillion. And yet our elected officials are not telling them the truth.
Oh, you might want to, I guess, well, go
You
ahead.
want to stop for a minute?
Yes. So the U.S. Let's say if the U.S. government was a client and they came to you and they said, "Hey, what's our financial condition?" What would you say?
I would say, like Price Waterhouse said to the House of Representatives recently, that your books are so shoddy, that your financial management systems are so weak, your internal controls are non-existent, that I can't trust the information you're giving me. And if I don't have financial information that I can audit, that means I can't tell you what your financial condition or the results of your operations are. And that's basically what I would have to say. In fact, let me just take a page from the accounting report that I showed you before, because that's what they do say about the House of Representatives, and I think it's worth repeating and memorializing on this program. Here's the report of the independent auditors. This is on the 15 months of the House's operations ended December 31, 1994. And word for word, here is what Price Waterhouse is saying. The House lacks the organization and structure to periodically prepare financial statements that, even after significant audit adjustment and reconstruction, are accurate and reliable. The House was organized to report financial information in the report of the Clerk of the House, and therefore only reports minute disbursements. Now I'm going on because I don't want to read the whole thing. But basically what they're saying here is that the House does not summarize disbursements in logical groupings or accounts, does not accumulate them beyond one quarter, or otherwise place them in a context that could be easily understood or compared with financial information of other organizations. Now, let me just read the end of the report. And the reason I'm reading this is that the question you ask is literally the question that Price Waterhouse is answering for the House of Representatives, but I would choose the same words to say that this will apply to the rest of government, that there is no way to tell you the financial condition and the true results of operations of the United States of America because of the conditions that Price Waterhouse has found in the House. It has to permeate all of government. And here's what they conclude. Because the House's accounting and reporting methods were outdated and of limited utility, the accompanying financial statements required significant adjustment to attempt to conform them to generally accepted accounting principles. However, the shortcomings in the House's information systems and the weaknesses in its internal control structure were so severe, and I'm going to underline, so severe, that they affected the availability and reliability of the data and information supporting the financial statements. These conditions also made it impractical for us to extend our audit procedures to the degree necessary to determine the effect that these shortcomings and weaknesses might have had on the House's consolidating financial statements. That would be their financial condition and results of operations. Listen to this. Therefore, even after significantly increasing our audit procedures and after numerous adjustments were made to the financial statements, The scope of our work was not sufficient to enable us to express, and we do not express, an opinion on the accompanying consolidated financial statements. What they've said is we disclaim these statements, or we issue a disclaimer, and we cannot tell you what the financial condition is of the House, as we would tell a publicly traded corporation. We're going to give you the statements as best we can, but don't rely on these statements as though they were the statements being issued by a publicly traded corporation. I will take that same scenario and say to you that you can apply that and maybe multiply it by 10 to the rest of the United States of America. There is no way to know the true financial condition until we have better accounting systems and we have independent audits.
And you talked about the importance of getting spending control devices. I think you talked about a balanced budget amendment and the debt limit application. Maybe you could explain those.
Would you repeat that question?
Well, I think you talked about the importance of spending control devices like a balanced budget amendment or a debt limit
Okay, yes.
application, as well as a line item veto,
Sure.
I guess.
You have to do some things that put the brakes on government spending. This is another issue. This is beyond the issue of how do I account for what I'm spending. Before we even get to that, should we be spending as much as we're spending right now? This, by the way, was the reason we had Graham-Rudman-Hollings for 4 years back in 1985 through 89. It was a simple way to slow down the deficit by saying we're going to reduce the annual deficit 25% a year. So in 4 years, the annual deficit is zero. Did we reduce the debt? No, because every time we took 25% off, there was still a deficit adding to the debt that's on the books. But what it did do, and everybody says it was successful in putting some brakes on spending. A balanced budget amendment would do the same thing. It would at least say that we're going to put a goal on the amount of total spending. A line item veto would also be helpful because it would enable the president to say, well, you know, there are certain things within this bill that I don't like. And while I need some things, and they are important, I'm going to take out these certain things. So a line item veto joined with a balanced budget amendment, to me, would be a significant braking procedure to reduce the amount of government spending. Does that say that we're being accountable? No. We still have to use generally accepted accounting principles and all the other things I talked about, including independent audits, to make sure that what we spend, even after the breaking, is an accurate reflection of the budget process and everything else.
Okay, but I mean, so you also talked about the debt limit application is a good idea, I think. Well, you talked about where you set a debt limit and nothing after that. I mean, once you hit it, you hit it.
Well, that's another good point,
I mean,
because really what we have is a very convenient way to design around painful decisions like the balanced budget amendment and like raising taxes. And nobody wants to see taxes raised, but why is it that Congress can conveniently raise the debt ceiling by using that plastic card? And they usually do it just before they run back for re-election, you know, between 2 and 4 o'clock in the morning. I was there, so I know. You know, why is it that we cannot stop or cannot control in a better way the increase in the debt ceiling so that when we run out of money, it's not as convenient for government then to run to the Treasury and say, well, sell some bonds and get us the cash because we know we're not able to raise taxes this year, but we know you can sell bonds because we just voted a debt limit ceiling increase. So I would say that we've got to do a much better job in linking the debt ceiling to overall spending and doing it in a way that we can apply some heat at around that time, some political heat and some other heat, so that the debt ceiling is not raised without political pain being incurred, much like it would be incurred if we had to raise taxes.
Mm-hmm. Oh, okay. Okay. Yeah, and I guess you talked about Graham-Rudman and Hollings. Maybe you could talk a little bit about the reforms of 1990, and you talked about the chief financial officer, and I guess that's a good starting point to start getting government under control of the accounting and...
Just after I left Congress, something called the Budget Enforcement Act was passed, and it did try to improve the budget process, but it did something else. Without advertising it, it killed Graham-Rudman. It said, Graham-Rudman, rest in peace. That's what the Budget Enforcement Act did. You know, there were many people who felt after 1990 that Graham-Rudman-Hollings was still in effect, because no one literally brought their attention to the fact that that Budget Enforcement Act killed it. Something else happened in 1990, and it was the passage of an act for financial management reform, an act that I call the Chief Financial Officers Act, which required every major government agency and department to have a qualified professional to deal with the problems of financial management, internal controls, better reporting, better accounting, things like that. And our Controller General, who I feel is one of the most trusted figures in government today, even though he is a creature of Congress, the General Accounting Office, has said that that act has already saved tens of millions of dollars because it has highlighted government waste and duplications and things like that. So I would say that the Chief Financial Officer Act has to be strengthened. There are people today in government that don't like it in Congress because it kind of limits the freedom they have in their committees to do what they want. In fact, after it was passed, it was the chairman of the Appropriations Committee that wanted to then take away the funding for it because he felt it would seriously constrict what he was doing on his agricultural activities for his district. So I would say, thank God it didn't get eliminated. I would say that we have to strengthen it, and it is a good reform. I'm proud that I introduced that bill 4 years in a row, and that President Bush did sign it after I left Congress.
Oh, I see. How much time is left now?
We got...
That just brought the auditors in for the first time in history.
Oh, okay. Go ahead. Oh, maybe you can tell the anecdote about the eye shades and so forth.
Well, many people ask me how my comments were received as a congressman when I would get up on the House floor in one of the Republican caucuses and talk about the shoddy bookkeeping systems. And one of the stories that I like to tell is the day that I did try to make some sense of the budget process and kind of was criticizing the Republicans' leadership in the caucus in those days back in 1985, 86 by saying that we've got to do some more constructive things, not just criticize the Democrats. And one respected Republican got up and said, Joe, you know, you're in Congress now. Maybe it's time to put away those green eye shades of yours. I turned to him quickly and I said, with all due respect, sir, I'm not going to trade in my green eye shades for your blinders. And that's literally what happened in Congress in those days. And until we saw this audit by Pricewaterhouse today, and thank God it was a Republican administration that called in the auditors, Congress has blinders on. It has had blinders, and it still has blinders, because apart from this audit, which is a very good development, there's a lot of work to be done.
Oh, okay. Well, what other anecdotes, I mean, can you recall about maybe the way House and bills were voted on in terms of just their cavalier attitude towards billions? Or
another interesting story would be when the clerk of the House quarterly would publish the huge detail for all the House entities, approximately 90,000 disbursements, and they would be listed just like you would list items in your check register, your checking account book when you reconcile. And members of the House who knew that I was a certified public accountant would come up to me and say, Joe, I'm not going to read this, but here, why don't you tell me what's going on? And I would be there sitting on the House floor in between votes looking at this, saying to myself, what does this mean? Is this what they expect us as members of the House to understand, with no groupings, no summarization, no logical categories where you can say, well, this is the total for the House barbershop, this is the total for the House printing or the recording studio. Worse than that, no comparison from this quarter to last quarter, and no annual accumulation. And yet here were members of the House saying to me, Joe, we're going to rely on you to tell us if something's wrong. And I would be looking at this thing and I'd be afraid to ask a question because I didn't know what I was looking at. And now we see that Pricewaterhouse, who's not afraid to ask a question because they were hired to do an audit, are sharply and severely criticizing that system. It has to change.
Oh, and I think we talked about accounting and reporting and the differences between the two. I mean, I guess lots of people say, well, we should run the government like a household. I mean, if you were running your household like the government, you'd be in jail. So maybe you could expand a little bit about that.
Well, I think there's a difference in the way we account for things and in the way we report them. I think when we say to people, we'd like to see our books, and Thomas Jefferson said this, that the books of the Union should be as clear as a merchant's books so that anybody can read them and we can see abuses. That's why I've called for a simple one-page statement in the form of a credit card statement, because people can understand that. And that's what they're used to seeing in their households. But that is no substitute for accountability, for a good accounting system. We need to first have an accounting system that properly tracks all government spending and all government income, and that can be audited. Right now we have systems that cannot be audited, as we've seen with the report issued on the House. And if you can't audit something, that means you'll never know what the financial condition is. So you have to separate the accounting. We must have the best accounting system, I believe, in the world. We're the largest entity, I think, in the world, at $1.5 trillion. But then we have to use a reporting process that is as simple, to again paraphrase Thomas Jefferson, as a merchant's books. Maybe as simple as an individual's books when they keep their own records, so that people, the taxpayers, the voters, can understand them.
Mm-hmm. How are we doing on time?
We now have...
And that's a little different, but I mean, you know, the way they were dealing...
In the Orange County situation, that was not so much a bookkeeping problem as it was a control problem, where an individual was allowed to engage in huge transactions, not being monitored by others and not being controlled, so that the entity, in this case the municipal entity of the county, was naked in certain transactions. There were risks that were taken with the taxpayers' money that should never be taken. When you are a fiduciary for someone else's money, the first thing you have to do is protect capital. Now, certainly those things should also apply to the United States of America, but unfortunately, we have deficits. We don't have surpluses, so we've never had the money to invest. So we don't have anyone that we can say we have to now control before they make some bad investment decisions. Our problem is the other way. Our problem is that we're spending too much money, that we're wasting too much money. And we don't really know how much the waste is, because we're using almost non-existent financial management systems or non-existent meaningful accounting systems in order to determine what it is we're spending. I'm delighted now, as a former congressman, as a certified public accountant. First, I'm delighted that as a congressman, I was the one sounding the clarion call. I felt like Paul Revere ringing the bell every day that we were going to hit an iceberg, and that what we were seeing was only the top of this iceberg, because we were using an accounting system that didn't tell us the true cost of government. It didn't tell us how much we were spending of the taxpayers' money. In fact, we were really spending the money, but charging the next generation by selling the bonds. And I would say that that's not a good thing for America. We all want to leave a legacy to our children and the future that is strong. A country that is strong not only financially, but is strong as a democracy. And I don't think you can have one without the other. If we have a weak economy, if we're disguising the real cost of government, this will certainly come back in future generations to hurt our democracy. I think Thomas Jefferson saw that, because he said that if we don't have clear accounting, and he said this well over 200 years ago, we will have abuses. All the taxpayers, all the citizens, all the voters are entitled to know how their money is being spent. And if it's not being spent properly, they should be able to see it now, not 20 years from now, when their kids are going to have to pay a huge bill.